Welcome back, fellow investors. In this video, I'm going to go over one of my favorite companies, and that's Airbnb. Airbnb provides the ability to rent a private residence in a destination where you're going. Either you're going there for fun or for work. You can rent a home, a condo, a room, just about anything that's mostly privately owned by somebody else. You can rent it on Airbnb. The experience is really unique, and it has really worked. If you like using Uber, ride sharing, if you like the sharing economy, then you're likely an Airbnb customer. I've been a customer for 15 years and have really enjoyed the experiences on Airbnb. I've also rented private residences that I owned in a mountain area where we rented cabins. And the experience as an owner was profitable and overall very positive. So I'm a big fan of the company, and I've had experience with them for about 15 years. The story behind Airbnb is great, and I encourage you to study it. I'm a big stockholder, and I want to revisit my investment to see if the stock's doing well. Should I buy more shares? Should I just hold my shares? Or should I sell my shares in Airbnb? I go through a process, and that process has a checklist of three main areas. First is it's all about the company. Do I believe in the company? Do I think it's being run well? Are they operating, efficiently? Is their business plan still very good? I'll answer that question. Next is the balance sheet. Is the balance sheet in good health? Is debt under control and other liabilities under control? I'll take a close look at the balance sheet and make sure it's in good health. Last, am I getting a discount on the stock? I'm a value investor. My preference is to get a discount on a stock and see that stock go up in value over time. So I will value the Airbnb company using their free cash flows and discounting those free cash flows to today's value. I'll also look at the earnings per share and value the company using earnings per share. I'll blend those two valuations to arrive at what I think a good value for the stock is and compare it to the current stock price. That'll tell me if there's an available discount or if the stock's being sold at a premium. Once I arrive and answer all those three questions, I could then make a decision to buy, hold, or sell Airbnb. Please keep in mind that I'm sharing my journey, my individual journey, and by no means am I recommending that you buy Airbnb stock nor sell Airbnb stock. I'm just sharing my experience with this particular company and this particular stock. And I'm not giving any financial advice out. I'm just sharing my experience, and I hope you find it interesting. Airbnb is the number one home sharing company in the world. They have the most traffic, they book the most reservations, and have the most properties available online. Their user experience is just better than anybody else's. Their availability when you pick a destination is probably the best. They just have properties in every destination where they're allowed. They have the highest number of properties and best availability. So overall, they just have a really good advantage in market share through the use of a better user experience for the person that's wanting to rent a personal residence, a room, a place to stay. Now, some areas don't like Airbnb. Airbnb is disruptive. It disrupts hotels, and I'm sure they're using their political clout to push Airbnb out of certain cities. For example, Airbnb is actually headquartered in San Francisco, but you can't really find Airbnbs on San Francisco because they've been banned. It's illegal to rent personal residence on Airbnb, which is kind of funny. New York's similar. You can find places to stay in New York in the Manhattan area, but what you'll find is that you're actually renting a hotel that's been converted into a Airbnb-like stay. You can stay around Manhattan. I can tell you from personal experience. In August, I was in that area. You can stay in Brooklyn and find a full residence you can rent on Airbnb, or you can go over to New Jersey as well. So some places are really pushing back against the home sharing industry. I think they're going to have a tough time because if you ban it in one city, just the neighboring city could take advantage and those property values go up. Those homeowners make the money. And I'm sure that at a certain point, a free economy, I think profit always wins out and serving the customer is always a priority. So we'll see how things play out with certain cities that don't like Airbnb. But overall, it's been a huge, huge success. I especially like that you can go to remote areas. I've traveled to Mexico and stayed in some small cities in Airbnbs, and that was really fun. I've been to Europe and stayed in Airbnbs. That was fantastic. I look forward to traveling to Asia and staying in Airbnbs when I go out there and really enjoying staying in a community versus staying in a hotel. Staying in a hotel is just kind of an experience that isn't as fun as staying in a residence within a community in the place that I want to get to know. Although this is a young company, they're already at a market cap of $105 billion. They have revenue of $9.9 billion. So you're paying about 11 times revenue, which is very good considering this is a high growth, profitable, high cash flow generating company. They have a forward PE of 36. And again, it's a high growth company. Right? Multiple analysts cover Airbnb, and their average stock price target is 11% below the current stock price. So the stock has done well over the last year. It's up 41% if you look at the 1-year return. If you look at year to date, the stock is up about 21%. So it's been a winner in my portfolio. And overall, it just has a lot of momentum. Airbnb has been growing. In 2021, they grew by 77%. In 22, 40%. In 2023, they grew by 18%. They're going to announce their earnings in a few weeks, and we'll see how much they've grown in the first quarter of 2024. But this has gotten to be a big company, and they continue to have a really high growth rate. What's really neat about Airbnb is that they rent many rooms, many private residences, but they don't own any of the real estate, which enables them to generate really high free cash flow. They make a percentage of whatever the rent was to that traveler, and they have very little capital expense. They don't have to build any of these real estate properties. That said, the free cash flow generated by Airbnb is really good. If you compare their free cash flow to their market cap, it's 3 to 4%, which is very good on a growing company. Their growth of free cash flow in 2023 was 13%. And in 2022, they grew it by 48%. So just a great cash flow generating company in Airbnb. Airbnb's balance sheet is in really good health. First, they have much more cash than they do debt. On the debt side, their debt is less than 3 times EBITDA. In fact, it's only 1 times EBITDA. So if they wanted to, they could pay off all their debt by operating the business for 1 year. They could also pay off all the debt immediately because they have much more cash than they do debt on the balance sheet. Looking at their revenue forecast and their earnings per share forecast, it looks really good. Revenues are expected to grow 14% in 2024 and then 12% in 2025 and continue to grow at that rate for the next 3 years. With regards to earnings per share is expected to drop 38% in 2024 compared to 2023. But then after 2024, the earnings per share will increase 14% in 25, 14% in 26, 16% in 27, and so forth. So the company is going to grow their business top line, and they're going to grow their earnings per share over the next 4 years. I calculated the value of Airbnb based on free cash flows and earnings per share, and I arrived at the conclusion that the stock price is being discounted by 16%. I believe each share of Airbnb is worth $189 per share, but the stock's being traded at $162.84. My calculation is based on the free cash flows I expect from Airbnb, discounting those free cash flows to today's value, and then establishing what value per share I would get, which in this case would be $195 per share using free cash flows and then comparing it to the current stock price. Earnings per share, I'm going to take the current earnings per share for 2024. I'm going to use a multiple of 36 for a high growth company, and I get to a discount of 8%. Or $176 per share. When I blend the two, I get $189 per share, and that's a 16% discount on Airbnb. So should I buy more shares in Airbnb, hold, or sell my shares in this company? Let's take a look and go over the 3 areas that I want to take a close look at before I make that decision. First, it's all about the company, and I love the company. I think they're very well run. They have the best business plan. They have the best website, the best user experience. They continue to grow. They continue to be profitable and generate a lot of free cash. More importantly, customers of Airbnb are just very satisfied with the experience. So I really like the company and I'm bought in on the company. Next is the balance sheet. Do I think the balance sheet's a good balance sheet? The answer is yes. They have much more cash on the balance sheet than they do debt. They can immediately pay all debts and they generate a lot of free cash. Their EBITDA, debt to EBITDA is 1, well below the maximum, which is 3 that I like to see. So balance sheet is in really good shape. Next is discount. Am I getting a discount? This is a high quality company that is growing and they offer, or I should say, I believe that the stock is currently discounted at 16%. That's a good discount on a quality company. Therefore, I'm going to be buying more shares of Airbnb. Thank you for watching my video. I really hope you enjoyed it. I really like covering Airbnb. It's just a huge success story of a unique company that's providing a new experience for travelers. And I've been taking those experiences for 15 years and really like the Airbnb experience. And I'm glad that I'm a stockholder of this company.